What you know about chilling in the back of the bug? What you know about rolling the back of the bug? We pull up with pools in the back of the bug. Them honeys getting all lit in the back of the bug. In the back of the bug, yeah. In the back of the bug, yeah. Just imagine the back of the bug. Hustling in the bug.
Yo, what's good, guys? Governor Gus back in the mix. You know, trading pattern. Let me just switch this video up and yeah. So today's strategy, I'll be giving y'all the only, if not only, but one of the top two strategies I use that basically just help me identify the market. If not, I'd say it's one. I literally say one of the top two. I was about to say it twice. It's one of the top two, man. It's one of the top two of the top two. That's how you need to know that it's hot, bro. But anyways, I'll be showing y'all liquidity and a new concept basically called ghost liquidity, which is something I am working on. If not, it's something I am using because it is showing proper, what do you call this? Proper results, man. It's showing me that it's working, it's showing me that it's doing the job. If not, y'all will see the results yourself. So let me just get right into it. But before I get right into it, let me finish the overview. So I'll be using liquidity and imbalances, and there's a concept where I basically use raw liquidity before it turns into ghost liquidity. If not, I will show y'all all of that right now. So okay, this is the Euro USD chart. Now I use the 1 hour chart, so I'm sorry guys, I don't only stick to the 15-minute, but I do also abide to the 1 hour chart. Do not restrict yourself to the time frames, but do not use these large time frames to get 15 minutes and 5 minute or 1 minute entries, bro. Like, you know, there is more information on the 15 minutes, but the 1 hour does tend to also show solid straight liquidity lines. If you go onto the 4 hour, I'd say that's a bit too much, but I like to stick to the 1 hour max just to get all the information I'm getting. The 30-minute is also a bit too much noise, and the 15-minute, that's why I also do use the 1 hour. So from there, what we would be doing is just outlining the liquidity highs and lows. So where to find liquidity is just places where you'd find common highs and lows. And how to identify common highs and lows, I'd just say you just look for equal looking highs and lows. An example could be there. You could say at some stage liquidity did reside over there, as they were equal highs and lows at that point over there, as you can see. And with me, I'd say I use the candle close or the candle opening, depending on the trend. And with that said, let me just go right into it. So from that, I'd like to separate my buy side and my sell side liquidities, but at the first I'd get my primary liquidity at the top, and then from there I'd get my lowest common lows being my sell side primary liquidity. So blue one would be my primary buy side, and the yellow one would be my primary sell side. And then from there, just start labeling out all the buy sides that I see in the trend, or I believe are buy sides within the trend. And from there, I would literally just let that liquidity cut through and not end, and that would become my ghost liquidity. So as you can see, we do have a couple of levels that are being respected by that blue line, which was outlining some buy side liquidity, as you all can see. Not the line I'm working on now, but this line over here, this one over here. As you can see, the price is set was with price bounced off at some stage, but I will be getting to that really soon. Right now I'm just trying to finish up all the buy side liquidities, and then from there I would also start labeling out all my sell sides. And let me just change the color of that to yellow. Okay, so from there, these would be my sell sides, and with my sell sides I also don't mind letting them being a bit close to the buy sides, but as long as you do give them room to breathe so you actually can determine information. And you must remember this is also a 1 hour chart, so the distance in between the candles will actually be greater when we actually go into our 15-minute time frame just to analyze and see what's going on. And then from there I would also take the previous levels from the previous trend, because they do also play a role. If not, this strategy doesn't only work on forex pairs, it also works in any market, honestly, because every market has liquidity and does also have imbalances that you can basically exploit in terms of knowing the direction or giving you a bias. And from there you would just go in after identifying all those liquidity levels and just look at how price moves through them. So we identified them on a 1 hour time frame, and now we're just looking at how price is moving through them, and you can see how price sometimes bounces off those levels that are outlined, and the sell side bounces going up. So this is a category where, not even a category, a concept where that liquidity level, how do I explain, let me put it like this. So if it was a sell side liquidity, I would expect price to come through and not bounce but initially penetrate, and after penetrating I would expect it to then bounce off to show that it's being respected, and then after bouncing off just continue with the trend. If not, retrace back to that level to be more specific, and then bounce off from that level to show that it's being respected. So initially, if a sell level is not respected, that means that it's a buy scenario, because price basically just came to it, and after coming towards it, it initially bounced off, showing you that buy pressure is still available. If not, buy pressure is still present within the market, or that level is still being respected more. No, it's not. It's being disrespected as a sell side level, and is being used as a buy side pressure, to be more specific. If not, vice versa, if it's going to be the buy side pressure, as you can see where price basically bounces off the buy side over there, which basically means that you would expect sell side pressure since it bounced off and didn't respect the buy side. Let me just change the color over there. So from here you can see that this time around price came from below, and instead of respecting the price by going through it, after going through it, retracing, and after retracing, bouncing off of it to show us that it's respecting price. But this time around we can see that price came in and then bounced off the buy side liquidity pressure, basically showing us that there is some sell side pressure at that point. So from there we just expect price to be ranging in between those 2 points. Since it bounced there and it also bounced off there, you'd expect it to either go to the next level of liquidity that was created before, if not probably back to that level, and then from that level, if it bounces again, you can expect it to continue going back down, and then if it penetrates through, that basically means that the sell pressure is now being respected, like this equation over here. And I'd say that's the basic characteristics you can expect from ghost liquidity also, which is a level that comes out after raw liquidity is taken out. So for me to explain the difference between the two, let me just find a proper place. Okay, since it was a downtrend, that basically means raw liquidity towards the sell side was what's being taken out. So The difference between ghost and sell liquidity is raw liquidity is this liquidity over here, which hasn't been taken out as of yet. I'll just change the color of that too. Okay, just that. So liquidity which hasn't been taken out as of yet. To be more specific, this section over here that was created after this low was presented, sorry, and after this low was presented, raw liquidity was available as the price was going up, and as price went up, you would expect raw liquidity to be taken out, and after raw liquidity is taken out, from there we would now have what's going on, bro? So from there we would now have ghost liquidity residing after raw liquidity has been taken out. So it starts off as raw liquidity and then basically turns into ghost liquidity after it has been taken out. And the best way to identify liquidity is by using, what do I call this, by using lower lows, if not common lows, common highs and common lows, which are lows and highs that basically look the same like this, or are around about the same level, if not candles that close around about the same heights, and candles that close around about the same lows. And from there, when price goes up, you would spot raw liquidity from that level that has been presented to you over there, which is this one. From that, you would just expect raw liquidity to be taken out, and then after raw liquidity has been taken out, that line should continue to infinity, bro. If it's infinity and beyond, to infinity and beyond. But what I usually do is just recycle all my analysis on a weekly, so I get rid of all the lines after a week. And then if there are lines that were being respected a lot, they'll probably still stay on the analysis, since in the next week those respected levels are still being shown. And from that, I would have my ghost and raw liquidity. So raw liquidity would be liquidity that's taken out. No, the liquidity that hasn't been taken out yet. And then ghost liquidity would be a price level of liquidity that has been taken out previously. With that said, let's just continue. So we basically show you how price moves through these liquidity levels. So as you can see, raw liquidity was presented over here. This is most probably the Asian session, but raw liquidity was presented over here as the price went down, and as price went down, liquidity was created, and this is where now I tag in imbalances. So here we can see that there are no imbalances on the 15-minute time frame, so you couldn't have told or known if price was going to go back up there without an imbalance, which is the strategy I'm trying to outline right now. But if you do go into a lower time frame, I'm sure there are a couple of imbalances there that did get filled up. So from there we can see that there is an imbalance over there. The price also actually bounced off to confirm that it's going towards that raw liquidity. And from there also there is another imbalance. Oh, it's not an imbalance, it's actually not an imbalance, but there, as price actually went down and touched liquidity down there, sell side liquidity, and disrespected sell side liquidity because it got some buy pressure. Price went through the imbalance, filled it up, and after filling it up, it retraced back to that liquidity level, and then respected the buy pressure that was being presented at the sell level, and from there just continued going up, and from there you'd also expect it to retrace back in, since it is creating more imbalances as it's going up. And as you can see, this is the imbalance it actually touches, and with that it's also working with some sell side liquidity which was being disrespected. It almost showed as if it was being respected, but that would have been a stop hunt, if not a swing low to most people. And from there, you can see the sell side was being disrespected, thus price going back up. And then here, price respected the buy side liquidity, thus staying up and actually just shooting up from there. Buy side liquidity being this rule over here, where I did explain that if price does break through the buy side ghost liquidity, that basically means that price is being respected. You'd expect price to retrace back into it, and after retracing, you'd expect price to then continue in its direction after that. That would be this equation that happened over here, where price respected the buy side. So price came, it broke, retrace back into it, even though it wasn't really a big movement. Sometimes it is big movements, but here it wasn't really a big movement. It went up, retraced back into it, and then it just continued going up, and then reached a sell, a level that it probably created even previously, and from there carried on disrespecting the sell levels, as you can see over there and there, as it tried to retrace back in. It did gain some support when it did it there and there, but then broke through, respected the buy level, and as it respected the buy level, it went up. This buy level being ghost liquidity, as this liquidity was raw liquidity here, and it was taken out, and after it was taken out, it became ghost liquidity thereafter. If you still recall me explaining this concept earlier on. But from there you can see price basically bounces off ghost liquidity over there and just carries on up, disrespecting the sell side liquidity, basically emphasizing the buy pressure that is present within the market. And as you can see, it just carries on until you reach a certain stage where the buy side pressure is now the one that is being disrespected. Like here, as you can see, that's where you see there's a lot of wicks, and from there it went through all the sell side pressures respecting it until it finally reached a level where we can say there is more liquidity lines that are present that you can identify that it basically did respect. Like from here, it basically respected the sell side liquidity. After going up, takes out raw liquidity that was present over there, or if not, raw liquidity that was presented over there as price was dropping down, and you expect it to fill up since there is also an imbalance over there. I know it looks clustered. Let me just get rid of the unimportant things, if not the non-important things. I know how to say it, bro. How do you say it? Unimportant? Non-important? Maybe, baby. But yeah, so you'd expect it to take out raw liquidity over here after filling up the imbalance that was presented. If not, there were multiple imbalances, but usually also the top imbalance is filled up, and from there raw liquidity would be taken out over there, and you'd expect price to retrace back and fill up any other imbalances that were created as price was trying to fill up as price was trying to reach for that raw liquidity. And then from there you can see that the ghost liquidity is now being respected, showing you that there is some sell side. Now I mean the ghost liquidity is being disrespected since it was buy side ghost liquidity, and that basically shows you that price is bound to drop at some stage if it continues disrespecting that price. And if it does respect it, we know that price might go up till the next raw liquidity it can find. So I'd say so far these would be the basics on how to use ghost liquidity and raw liquidity, and also to be more specific, how to integrate imbalances and the liquidity concepts that I just gave to you guys. So what you just need to know is the difference between buy and sell side liquidity and the characteristics you'd find from sell side and buy side liquidity. So the major things you'd expect is just for it to respect that level if you want to have a bias towards that trend. And if it's not respecting that level, I'd say that basically just increases the probability of price going the opposite way. If not, I'd say I personally use this strategy for my scalping. What's that? My scalping trading strategies, and I have found it effective, especially in the high time frame, as long as you just outline all of the liquidity levels that you do find do play a major role within the 1 hour time frame. And from there you just find the prices on a lower time frame and see how price is moving through it, and from there you just predict that how movement is. If not, I also do work on a double tap movement, which works most of the time but doesn't work all the time because there isn't two taps movement. Sometimes there are three taps, sometimes it's one tap, but that level is usually respected. As long as that level is respected and my bias is towards that trend, I initially just know where to go. If not, this is this is just one of the top two strategies here that I do use. That's not all the strategies, but I also do find that these two do work together best, since all you need to do is just label out the raw liquidity, use the ghost liquidity lines or levels to know where price is moving, and initially just aim for an imbalance that has been presented to you. So if that raw liquidity is tagged with an imbalance, then you know that that's most likely going to be taken out right now rather than something else that isn't tagged with an imbalance. I'm not saying it works every single time, I'm just saying most of the time it'll work, bro. Like 90% of the time it works. I can give you any scenario right now, like even here, where you can see that there's liquidity, raw liquidity around about here residing, and from there we can see price goes down. Why does price go down? Sorry, price goes down to fill up this imbalance over there. So we definitely know that this raw liquidity down there is going to be taken out, and after it's taken out you can see it has presented more imbalances, and from those imbalances created raw liquidity above there, and from there we'd expect price to then go back up to then fill up those imbalances and take out that raw liquidity there. But initially it does most of the volatile movements towards the trend and less of those other liquidity takeouts or takedowns, um, less of the liquidity takedowns in the opposing direction. So you basically have more trades towards the trend rather than countering the trend, and then you'd have less trades being a counter trade. So you'd have more pro trades, sorry. You'd have more pro trades due to the pro trend direction, and you'd have less counter trades due to the countering basically direction, because you're basically just kind of calculating all the retracements also, if not all these small movements to be more specific. So you can't really aim big if you're going to be aiming for a retracement in terms of scalping, thus being why I just take smaller profits if I'm going to be doing a counter trade, and aim for more profits if I'm going to be doing a pro trend, since I know that that trend is bound to continue in that direction and basically give me more profits. But anyways, this is my strategy. I give it a 10 out of 10, man. If you really do sit down and try to understand it, it does look complex, but It's easy. You just start with the buy side and the sell side liquidities. If the liquidity is taken out, you don't cut the line, you just let it carry on, and that basically becomes ghost liquidity. And after it becomes ghost liquidity, just expect price to be bouncing around those levels to basically give you information, and then you just use the characteristics that I explained here, and you're pretty much bagging that money, bro. You're making that money. Anyways, this is Governor Gus, Trading Got Me. Hope this was helpful for most people, and I hope y'all niggas start making money. Peace.
Baggy bird, what you know about chilling in the back of the bug? Just some money in the back of the bug. I'm hustling in the back of the bug. Shooting that shit in the back of the bug. In the back of the bucky. These niggas is hosting a party with all of these homies. It's getting too rowdy.
I could never crash out. I could never crash out over no bitch. Fuck is you talking about?